Welcome everybody to our Tactical Tuesday. We're into February already, 2022. Pretty crazy how time is flying. I'm just going to turn on our banner here. There we go. And we have an awesome topic tonight to do with mortgages. That's something that we all need when it comes to being investors, getting involved in investment real estate. We need to we leverage our money the best if we have the bank's money as in the form of a mortgage against a property. That means our money is leveraged much higher. We're going to get a better ROI, the higher percentage we have of a mortgage on that property. So we're going to be talking about mortgages. We're going to talk with two mortgage brokers. One's from Ontario, one's from Alberta. But as far as I remember, they serve pretty much anywhere within the country, and they're investor focused. And we talk about that all the time too, guys, about the importance of building your team, those that you work around you that are investors themselves, that are investor focused and work with investors on a regular basis. Totally different than a mortgage broker or a banker that works with homeowners on a regular basis, and that's the main part of their business. So we're going to be interviewing Shaune Impey and Shaune Sullivan. So we're going to introduce them in just a moment. And just before we do that, though, remember, guys, say hi as you come on. I see a few have already said hi. We have some tuning in from Florida, from Ottawa, from Whitby, Ontario, and all across the country, I'm sure. So just say a quick hi as you come on. And if you're one of those people that watch us every single week and don't say hi and don't comment, maybe tonight's the night where you can get out of your comfort zone and put something in the chat. And just remember, as we go along, if questions come into your mind, throw them in the chat and we will do our best to answer them as we go along. Or if we don't answer them right away, we'll answer them hopefully by the end of our stream tonight. So any questions you have, just throw them in the chat. If it has to do with mortgages, it's something that a mortgage broker can answer for you. Feel free to ask the question and we will do our best to get you the answer. So I see Cape Breton and Victoria, Yellowknife, Stony Plain, Kitchener, St. Albert. So all across the country. Good to see you guys. And thanks for saying hi as you come on. Okay, so let's get started, guys. So tonight is all about mortgages. We're getting the scoop on what's happening in the mortgage industry. For us as investors in particular, is it getting easier to get mortgages? Is it getting more difficult to get mortgages? What types of qualifications are necessary for us to qualify for mortgages? Should we be doing it in our personal names or in our corporate holdcos? There's so many different questions that come up when it comes to getting financing. And as we all know, that's really one of the big hurdles that can hold us back. If we can't get financing, it's going to be much more difficult to buy real estate. Okay, so we have the two experts with us, Shaune Impey and Shaune Sullivan, and I'm just going to remove this banner so that I'm not blocked. Okay, guys, so let's start with you, Shaune Sullivan. Shaune Impey has just disappeared. I'm sure he'll be back. So Shaune, tell us a little bit about yourself. You've been a mortgage broker for how long? Where are you based out of? And maybe let us know what areas of the country you cover.
Sure. So I'm actually in Ontario. I'm just outside of Toronto in Whitby. My brokerage is called Approved Financial Services. And we're part of the Verico network, so we can actually do mortgages across the country. Okay. For me, I've been a mortgage agent for 3 years. I got my license in January 2019, so I actually just passed 3 years. That's when COVID and stuff came along, and then that's when I decided that instead of trying to find first-time home buyers, it'd be a little bit easier to deal with people who are investor focused. And then that's where I've been focusing since then.
Awesome. So let's start with kind of a question, I think. And we got Shaune back, so I'm gonna I'll just let him deal with his background there if he's going to. Give me a thumbs up, Shaune Impey, if you're good to go, and I can bring you back onto the screen. Okay, I see a thumbs up. There we go. All right, good. So question that is really kind of the beginning of it all, because a lot of people aren't clear what a mortgage broker is, how much it costs to use a mortgage broker, what the difference is between a mortgage broker or just going to my bank that I've always done, just gone to the bank to try to get financing. So maybe Shaune, Sullivan, you can just let us know what are the big differences between a broker and just going to our bank?
Yeah, well, as a broker, we actually get to use multiple lenders. If you go into your bank, you're basically their bank's client, and the people who work for the bank are only able to sell you their products the way that they want to sell them. So we have more choice for you, which is gives you more options. It gives you the ability to do some different deals and to do things differently.
Awesome. Shaune Impey, what would you add to that? What's the difference between a mortgage broker and just going in and walking into my bank?
As a mortgage broker, we work for the client, and when you wander into your bank, they work for the bank. So I don't know who's gone to, say, sign up a renewal notice at a bank or something, and they tell you, oh, my rate is 289 or 259 or whatever, and you go out and talk to a broker who's going to get you maybe 249. You go back to your bank, and the bank says, oh, we'll match that.
Mm-hmm.
So what are they doing? They're trying to make the most money for the bank, and we're trying to save you the most money as a broker working for you as an individual.
Okay. So for those that have never used a mortgage broker before, what does it cost? If I'm wanting a mortgage, what does it cost to use a mortgage broker? Zero. That's
Zero.
crazy. Yeah.
Zero on any bank deals and stuff. If it's private, then you pay your broker for private deals. So.
Okay. Okay, good to know. So, that brings up another question then. You guys don't just have access to, the big banks out there, but you do have access to private funds as well. So when would it be beneficial for an investor to have access to private funds? If they go to their bank, they will never get that. But going to a mortgage broker, you have access to private funds. What's the benefit of that for an investor from your point of view?
Well, a lot of private funds I do are basically flips, for instance. The odd time a BRRRR, but more often a BRRRR, you have to be able to qualify, if people know what a BRRRR is, buy, renovate, rent, refinance, and repeat. If you're doing a BRRRR, you have to qualify for a takeout mortgage, right? So if you can qualify for the takeout mortgage once the renovations are done, you can qualify for the purchase to begin with, and buy it as a rental property and fix it up. So you can get A rates on that, or maybe a B lender rate on that file, depending on your income and everything else. So some people are just flipping and they don't have the credit or anything like that. So, but they got a bunch of cash and they need someone to finance that purchase. So there's lots of what we call equity lenders out there. So they only want to know one thing: how much is it worth? And what loan to value do I have to protect myself as a lender? And if it's 65, 70% in that range, then they'll lend in those all day, because they know if you get in trouble, they'll just foreclose and get all their money back. Yeah. So they're good for flips generally.
Okay. Awesome. Anything you want to add to that, Shaune, Sullivan, or?
Yeah, sometimes they're also good for people who have just really bad credit. So if you got yourself into a jam, they can help you get out of it.
Okay.
Yeah,
good. So, yeah, go ahead,
Shaune. Short-term money is private. It's not. You don't do a 5-year private mortgage.
Right. That's where it gets really costly. Yeah. Okay, so good. We covered a couple topics so far. The difference between now, one of the questions in here then, if somebody isn't paying you as a broker, how do you guys make money? And I'm assuming the banks pay you, and that's where you guys get paid, right?
That's correct.
Yeah. We get money, and we get different pay depending on the length of the term, type of mortgage sometimes, and there's a number of varieties of ways we get paid. So full disclosure, we get paid the most money on a 5-year fixed term because the banks make the most money on 5-year fixed. It's not always the right product for some people. So if you your broker's trying to sell you a 5-year fix and you only want it for 3 years because you're going to sell your house, then that's what you should be pushing for.
Makes sense. So So the beauty though, if you're working with a mortgage broker that's looking out for your own interests, for the interests of the person looking for the mortgage, trying to qualify, that they will try to give the product that suits them best, not necessarily the product where they get paid the most. So it is good to know that though going into it, so that you can be aware if you're not using a pro like Shaune Sullivan or Shaune Impey, that's something you might want to keep your eyes out for.
I tell people I will get them the best rate for the best product from a lender that you actually qualify at, not the ones on the internet that are insured mortgages with penalties and clauses that that you'll never be able to see those. So
right, absolutely. So okay, do you have to? So Shaune Sullivan, you're in Ontario. Shaune Impey, you're in Alberta. Do you have to use a broker in the province you live in? Do you have to use a broker in the province that you're buying in? How does all of that work?
well, we can go across Canada. Like I didn't actually do an introduction on myself, so
that's right. Why don't you do that now, Shaune?
I'm with Mortgage Architects, which is across Canada. So we have what's called a central underwriting unit, and we can do mortgages in pretty well any province except Quebec. That's kind of a special case in Quebec. So I would refer it out if you had to do something in Quebec. I got a couple of contacts there. Nova Scotia is a tough one too. So just because of their laws about you have to live in the province to be a broker, and it's hard to share. But pretty well anywhere else, we can either refer you or help you with the mortgage. I do Ontario, BC, and Alberta all the time. Some Saskatchewan, Manitoba. Yeah.
Okay, awesome. And same goes for you, Shaune Sullivan.
Yeah, same goes for us. We have a central desk too, but I can actually do Quebec. But their laws are way different. I think I would, if I was in the situation, I think I'd be like Shaune, and I would refer you to somebody who's in Quebec.
Yeah.
Okay.
We don't parlay very good, so I wouldn't do. Everything's done in French there. So.
Yeah. Okay. All right. Good to know. All right. So I'm just going to have a look through some of the questions and see here. Okay. I don't see any questions. Cindy Sanders is asking, can you explain how a commercial CMHS, she might mean CMHC, I'm not sure. Can you explain how commercial mortgage works, especially when wanting to purchase multi-doors? Does that question make sense?
Yeah, that makes lots of sense.
Okay.
Yeah. Who wants to go, Shaune?
Go ahead.
Yeah. So basically, when you're going to CMHC for a mortgage on commercial property, the property itself has to qualify. It's a little bit different than buying a single family or duplex or triplex or even a fourplex, where the person who's buying it has to be the one who qualifies for it. So when you're going into multifamily, more than 5 doors, this CMHC has some pretty good rates. They'll actually let you buy them with 15% down. So they'll finance you up to 85% LTV.
Okay.
And as long as the property qualifies, they'll look at you, but you're less important than if you're buying a single family home.
Good to know. So if mortgage qualification is starting to run out, or you're not as easily able to qualify for mortgages, then if you start looking at the multifamily, which from what you said is 5 units or higher, then the building is what's qualifying more than the person itself. The person is still in the equation, but the building is more important. Is that what I heard? Am I saying that correct? Okay.
Yeah, and you can't be like a double bankrupt with a 300 score or something. That'll come into play. But generally, as long as depends what they want for personal guarantees and stuff. The 85% loan to value is based on CMHC's evaluation of the property too. So they've been known to downgrade the property a little bit on the value. They have their own calculations they use for income and expenses and stuff like that. So you may buy it for $2 million, and they'll say we'll give you 85%, but we'll only have 1.9 or 1.85 or something like that. So you got to be careful what the 85% is. So the rates are cheap. they do charge fees, and they do have a number of programs out there that you can get really good loans if you say offer it at a market rent, less something below market rent, because they're looking for maybe some lower income housing options and stuff like that. So I'm not a commercial broker, and if you need to get into the commercial side, you need to talk to an expert who can fill you all in all those programs. So I have those people. So.
Okay. Awesome. Good to know. So what you guys have mentioned it a couple times already, and you said that the rates are good. So maybe just give us an idea. What are the current rates that are happening right now? Let's say for a variable mortgage for an investor putting 20% down. What kind of rates are you getting? And also, what rate would you suggest investors use on their performas if they're doing their calculations ahead of time? So that could be two different rates, but maybe give me your idea on those numbers. We'll start with Shaune Impey.
Sure. So variable rates there's a wide range. Number one, depends whether it's owner occupied or not. So you could be an investor buying an owner occupied home, say a basement suite. So you could get owner occupied insured rates for that. Variable, you'd probably get as good as like one prime minus 1.2, minus 1.25, depending on the lender and stuff like that. So that would be putting you in the 1.25 range for an interest rate.
Okay, so it's prime right now. Just to clarify, is 2.45%. Is that
today
correct?
It's March 2nd. It might be a little higher. So.
Okay.
So yeah, prime is 2.45. If it's a rental property only, it varies. Probably prime minus a half, somewhere in that range would be. Some are a little lower, some are a little higher, and it depends on the lender, the program, and stuff. Okay. Just like the lowest rate is not always the best mortgage, because it could be on a product that doesn't do the best, or it's from a lender that doesn't have the the product you want. So
yeah,
fixed rates are kind of all over the place now. They're probably about half a point difference between the lowest and the highest on the mainstream lenders. So again, we have to look for the best product, where you qualify at. So I always tell people, like, rate is about the third or fourth thing we should be talking about. So I'm sure Shaune gets the same emails I get. What's your best rate? And I say, well, that's like asking me what's the price of a car. I don't know what you're looking for. I mean, I don't know your credit score. I don't know your income, what you're doing, investment. Is it owner occupied, insured? Is it uninsured? There's way too many variables. And
yeah, for sure. Okay, so the numbers you've given me so far are somewhere between, let's say, 1.5% to 2%. That's kind of the numbers that you can get on a variable, and they might be, higher. Obviously, they're going to be higher on a fixed rate. But now, next question: when it comes to doing up a pro forma, when you're doing your numbers, what rate would you suggest that investors should put on that pro forma here in 2022? Okay, so we've heard all the headlines about what could be coming up in 2022. So to be on the safe side for an interest rate, what number would you suggest they use on their performance? Maybe we'll get, and this is where you can have different opinions. So we'll get Shaune Sullivan to throw out a number, and we'll get Shaune Impey to throw out a number. And then I'll throw out one too.
I think you should be at least 2% higher than prime. Personally, when you're going to qualify, you have to qualify on a stress test, which is 549. So I don't think you would go that high, because I think you would be taking some money off the table, and it would make the performer not look the greatest. But 2%, especially with what they're talking about with going on with rates. 4 weeks ago, or even a week and a half ago, they were talking about maybe a half points in March and the points last week, right? So who knows what's really going to happen? But I think 2% is good.
2% over prime, you're saying, Shaune, right?
Yes.
So 4.25, 4.5 in that range.
Yeah, that range. Yes.
Yeah. Well, first thing, as an investor, you have to decide whether you're a variable rate ride the wave, or you're a fixed rate, I want to lock in my numbers. So if you're doing something today and plan to do a mortgage pretty quickly, probably 3.5% would cover off any rate on a rental. And if you're going to lock in for 5 years, then that would be your 5-year plan. If you're variable, I would say probably use about the same rate, because right now variable is 1.5 roughly, or maybe closer to 2 if you're rental property. So it's got to go up 6 times before you hit that 3.5 range. I don't think that's going to happen in 2022, but don't quote me on that. But it might go up 3 times, and if it goes up maybe 3 times in 2023, now you're getting close to where your fixed was. So now you got 2 more years, and you can kind of play with the house money that you saved on interest to cover that off. So that's kind of what I tell people in the 3.5 range. I told people about 3% here, 3 or 4 months ago. But
yeah.
And the other thing to look at is that if you are going variable, there's two types of mortgages out there, and they get confused. One is what's called adjustable, and one called variable. So a lot of lenders and people call a variable rate what's really an adjustable rate, which means that the payment changes with the interest rate change. A true variable rate mortgage, your payment stays the same, and if interest rates go up, you pay less on principal, more on interest. Or if they go down, you pay more on principal, less on interest. So TD offers a true variable rate mortgage where your payment is the same all the time, regardless of which way interest rates go. So you can control your cash flow that way if you get into one of those types of. Some of the other banks do them as well, but in our channel, TD is the most noticeable. So ask your broker if the payment changes, if interest rates change. If they can't answer that question, then maybe they should talk to somebody else.
Yes, absolutely. They should know the answer to that question. Okay, guys, for all of you watching, I would love to know what you're currently putting on your performance. Okay, so we heard a couple numbers. Just throw it in the chat. Marie says she uses 3%. Shaune Sullivan, you suggested roughly 4.5. Shaune Impey suggesting roughly 3.5. Obviously, the higher interest rate you use, the more conservative you're being with your numbers. And of course, whether you're paying that or not, the cash flows, the whole point of a performa is just to kind of identify whether this is a property you should be buying or not, whether the numbers make sense on this property or not. So if you're being more conservative and it's still cash flows, great. If you're being super conservative and you can't find a property that cash flows because you're being way too conservative, that's where you can start maybe looking and being a little bit more realistic. But good to know where people are using. So the numbers I'm seeing in the chat now are 3%, 3.5, 3, 4, 3, 3. So I think we get a good feel for what people are using, what we should be using. We've heard that interest rates could be going up this year. So we want to be on the conservative side. I like what Shaune, you mentioned, if it goes up 3 times at 0.5 point per time, that's 1.5%. If we're getting it at 2% now, we're up at 3.5. I think that that's quite realistic. So somewhere between 3 and 4%, maybe even between 3 and 4.5% is probably being a conservative number on our performance. And we're covering a lot of the basis on that. So something to keep in mind. Now, we've seen a couple of questions on here, and I have an opinion on this as well. What do you usually suggest for an investor? Should an investor be looking at a fixed rate or a variable rate? Which one would you suggest for an investor? And let's start with Shaune Impey.
Yes, you should look at one of the 2 options. So it's all about your risk profile. I mean, I got a number of clients, veterans, been around forever. I'll throw out a name that a lot of people know about, Arlen Dolan, who owns hundreds of doors. Him and I are partners on some properties, and he goes variable all the time, just for the convenience of being able to get out of his property. And it's always worked for him in his 25 years and his hundreds of doors. So when rates were, down at the point where fixed was only a fraction over variable, and I'm going to hold this property for a long time, I had a number of people who locked into fixed when it was like 1.69 and variable was, 1.45. Well, you're less than a quarter point difference on those. So maybe if you want to play the interest rate spread, maybe fixed is the way to go. You just got to be aware that, you could have penalties even at a low rate and rates rising. Big banks have a funny way of figuring out how to get a penalty out of you regardless. So you got to really know how the penalties work and where that point is where you don't pay what's called the interest rate differential on your mortgage for breaking it. And people are surprised about that. So
I remember maybe about 10 years ago, we were looking to move banks to refinance. We went in to find out exactly what our payout penalties on these particular mortgages were, and they were anywhere from $12,000 to $20,000 to break at that time each mortgage. And it was like, okay, we're not refinancing. We're just we're gonna ride this out until we come to, because the prices hadn't changed dramatically, and it wasn't going to be worth it for us to be paying those penalties. So absolutely, we have to be cautious, and I think that's what Adele said here in the chat. It depends on your plans for the property. If it's a property that you're planning to keep long term, you're less risk risk adverse, then you might lock it in. If you don't mind a little bit of fluctuation and it's not going to keep you up at night, you'll likely go variable. I know for us personally, we have always gone variable in every single one of our mortgages since the beginning of time, unless we couldn't qualify for a variable. I remember there were several where we had to lock in to get actually. Maybe that's just what the mortgage broker told us, Shaune, but that's what we had to do back in the day. So, but upon renewal, we've always renewed with variable. It's kind of always proven to be the lower of the two long term. And of course, when you do go variable, you have the option, and correct me if I'm wrong, but you have the option to lock in at a fixed rate anytime you want. Is that correct?
You do, yeah.
Yeah. So if you're watching,
no penalty.
Yeah, you have
Just,
that option.
One more quick comment on interest rate differential penalties is the banks always base it on the closest term to what you have left. So if you have 3 years and 7 months left on your mortgage, they'll use the 4-year rate to calculate your penalty. If you got 3 years and 5 months, they'll use the 3-year rate. So I had a client here last year where her penalty, I can't remember the exact numbers, but it was like $8,000 to break it today. But if she waited about a month and a half, it was going to go to the next closest term, and the posted rate on that term was quite a bit less than the 4-year rate. So her penalty actually increased a couple of $1,000, even though she paid more down. So always know that your interest rate differential penalty could change, and it could go up even if rates don't change.
Yeah.
So,
and that is the downside of locking in, because when you have a variable, then the payout penalty is just 3 months worth of interest.
yes, 3 months.
And so you can calculate what that's going to be roughly, and you got a good idea as to what it's going to cost you to get out. And for us, with investment properties, and most of our properties are with JV partners, you never know when a partner needs to get out, or you might want to sell, or whatever the case might be. And so we've kind of always just stuck with the variable so that we have a lesser of the penalties.
If you do have to get out of your JV, and I got quite a few JV partners, and when one says, "Hey, I want my money back," you can fight with them until they sign the agreement, or just get out of the mortgage and sell the property and save your headaches. And there's two ways on variable rate. Some banks charge the time rate, the penalty, and some will use
I think we're losing you a little on the audio there, Shaune. I don't know, Shaune Sullivan, if you can hear him, but he's kind of cutting out. Yeah, you're kind of cutting out a little there, Shaune. So let's just move on to the next question then. This is a question to me that is, when I was a realtor, I got asked this by a couple of my clients, and it always made me think. And so I'm going to ask this question of you guys. What if someone here today is listening and watching this and they want to be your favorite client? They want to be Shaune Sullivan or Shaune Impey's favorite client. What do you guys as mortgage brokers look for when someone comes to you for a mortgage or for financing, whatever it might be? What do you value in a client? What do you look for that a good client would bring to the table?
Yeah, I like people who are good humans. So somebody who's going to come to me, they're going to be honest. They're going to have their paperwork. They're not going to try and do anything that's fraudulent. Um, they're, you know, they're they understand how the process works, and they understand that there will be some ups and some downs, and that they ride that out with me until we get them, funded and get them their house.
Awesome. I like that.
Yeah,
Shaune, you have an opinion on that?
Full disclosure from the client about their situation, properties they own, and anything that might be going on in the background, because the banks will find out, or as a broker, we'll find out when we check different things. I saw a post on one of the groups in my mortgage brokering that a client told a broker they only wanted to go with a certain lender because that lender doesn't report to Equifax and they wouldn't show up on their bureau. Well, that's just a precursor to something, right? So, and docs are so important to get those done. So, as a broker, when we send in a file, we want to send in a complete document package. And if we get, dripped all the documents and stuff, I just won't send it in. Because then the underwriter at the lender has to go through this thing, and if they don't see all the docs, they put it at the bottom of the pile, and they may not open up for another 2 or 3 days, even if you send docs in. So, yeah, I don't ever like to get those emails saying, "Oh, we need additional paperwork."
Yeah,
I mean, sometimes it's unavoidable because you didn't foresee something, but 9 times out of 10, you can probably anticipate what they need. So have it all and have it ready, and just be on top of things. So, and people who question what docs that we need as a broker, they piss me off. So, I wouldn't ask for paperwork if I didn't need it, because it's just more work for me to organize it, sort it out, and send it in. So,
So if your mortgage broker, guys, here's a lesson. If your mortgage broker asks you for paperwork and you say to them, "Why do you need this and why do you need that?" then you might go down the list of good clientele. So here's the point that I heard from both of these guys, and I agree with it 100%, is honesty and full disclosure is so, so important. There's no point in hiding something. Be upfront. Tell them exactly what your situation is. That information is going to be kept confidential with them. They're not going to be spreading that stuff around. That would do them no good. So, but being upfront and honest, being a good human, as Shaune Sullivan brought out, extremely important. And then secondly to that, being organized and getting your paperwork together and, put it all together in one Dropbox file or Google Doc file or whatever, Google Drive file, and send it all to them at once so that they can go through it and they can send it to the underwriters all at once. So organization in getting our paperwork together is extremely important as well. Are there any major documents? Let's say somebody's thinking, okay, I'm going to start going for financing. I want to contact one of these Shaunes here in the next month, but I need to get a couple things together. What are some documents maybe that they should start thinking about getting together? I know there's a huge long list of them, but maybe something that takes more time to maybe put together. Is there anything that people could start working on to be a little bit more prepared?
I have a template, a basic list for docs for people. So we always need your ID. We need your driver's license and one other form of ID to prove that it's you. And we need your income docs. So if you're an employee, we need a job letter. We need pay stubs. I usually ask for at least a month's worth of pay stubs. And, this time of year, I always ask for their last stub from 2021 so that we know what their year-to-date is. We need, I said job letter. We need your pay stubs. We need your NOAs for the last 2 years. We need all your T4s so that we can look at the T4s versus the NOAs. I ask for T1s all the time, just because I don't know what might be on there, and sometimes you don't ask enough questions or the right questions to see what they might have on their T1 with a side business or some other things going on. And then I ask for any information on the property. So if you own anything, we need the property tax, we need the mortgage statement, we need the condo fees, proof of condo fees, and information on the size of the house so we can know what the heating allowance to use. So that's the bare bones. Proof of down payment. If you're not refinancing, you have to prove where the money came from. Your assets, if you own stocks or TFSAs, or that's where some of your down payment's going to come from. 90 days of statements. So
Okay.
it's not, if you're a corporation, well, you need to have your articles of incorporation, last 2 years financials, and business bank accounts as a minimum.
Okay. So if somebody's listening to this now and you just went through a ton of documents there, Shaune, and maybe they're all at home just writing notes and trying to get it all down. I think really the thing is if they were to contact you, either one of you, you would send them the full list of the stuff that they got to send in to you. And then, they can start working on putting that list together. And, once they have that full list together in a file, they send it to you. Now, one of the interesting question here, one of our Facebook users asked, is how do you handle accepting sensitive paperwork? Email isn't very secure, and identity theft is a major concern these days. Do you have a secure method of receiving documents from clients? So is there anything that you've been using to this point if somebody wants to send you personal information?
Well, a lot of people do put them on Google, and sometimes it's password protected, or Dropbox is another one. You have passwords on them. A lot of people email me stuff, so I'm not techy enough to know how to hack into an email and steal people's documents, but all our stuff is stored on secured servers in Canada, so it's not. I don't think there's any issues of security, but I have people who refuse to email me documents. They said, "You want that stuff? Let's go meet at Tim Hortons. I'll give it to you, and you can take it home and scan it."
Okay, interesting. Okay, anything to add to that, Shaune Sullivan?
I've been through the same things.
Yeah. Okay. So yeah, I think in the past I've just put everything into a Dropbox folder, and you can send a link to that folder to that specific person. So if it's intercepted somehow, somebody else can't open it. Or Google Drive, you can do the same. So that might be a way to get around that. Okay, so a good question here from Tori. He says he's just curious. Do you prefer a client with high income and lower credit? Or do you prefer a client with high credit rating and lower income? So in other words, what's more important, income level or credit score?
It depends on what you're trying to do. If you're trying to buy $1 million house on a $50,000 salary, it's not going to happen. So even if your credit was 900, we call those people unicorns, and I've seen a couple. You definitely need to have the income to qualify for the property that you're looking to buy.
Okay. So they're both important, but obviously it's a non-topic if the income isn't there to support it. So that's kind of what I get from that. Okay. Let's see if there were any other questions. I don't think I missed any. So we talked about that. Now, right now in today's climate, somebody is going to be putting in an offer. They're going to be putting a financing condition on that offer. How many days do you guys need for them on average? What would you suggest they put on their offer for a financing condition? How many days to get that condition waived in most cases?
I'm going to say a minimum of 2 business weeks, but it should be longer. If you could go 4 weeks, that would be great. It depends on if you need some documentation or if you're having trouble putting documentation together. So if it's an income property and you need to get the leases and that type of stuff from the current landlord, you're going to want to extend that out farther. It's a clause that I like to see in some of the stuff that I see. The condition of financing starts once I get all of the income docs and I'm able to look at them first. So instead of saying I'm signing it today, and 3 weeks from now will be condition of financing, if you don't give me the income docs until 4 weeks from now, it's 3 weeks after that I'm going to be able to get it financed.
I see. Interesting. And so that's assuming you're buying a tenanted property where there are docs. If you're buying homeowner type property, they wouldn't have anything like that. But that makes sense. You got to have all the stuff first, and then the time period can start. So I like it. Shaune Impey, what are you seeing average condition period that seems to be working?
Well, Ontario has different rules. A lot of Ontario files, I'm pretty sure, have no conditions on it. So I like 10 business days, so which is 2 business weeks, as Shaune mentioned there. So it really depends a lot on who your buyer is too. So if it's somebody making a lot of income, salary job, don't own any rental properties, no debts, just almost like a slam dunk, well, you can turn those around pretty quick. I sent a file in late Sunday night and called the appraiser, and I had the file approved by noon on Monday and the appraisal by 8 a.m. on Tuesday morning, and got done. But that was a rush on the special request. It's all about the docs. If you don't send the docs in and have them up front, then no time is long enough. So
yeah, okay. And just when it comes to getting prepared, going back to that question about getting prepared, I'm an investor. I want to be prepared before I go and put in an offer. I know in the past, and it's probably still the same, maybe you can let me know, can an investor get pre-approved for a mortgage? Or how does that work? So I know, for a homeowner, you can kind of get pre-approved to a certain amount, but for an investor, can you be pre-approved for a certain amount to then go out shopping, or how does that work?
Well, I don't call it pre-approved. I call it pre-qualified. Here's roughly how much money that you can spend on a property. Now there's 2 things to talk about here with qualifications. So buying your own owner-occupied home is, you pretty well have a set amount, because you know what your liabilities and maybe some rental income, you've done all the calculations on the property and stuff. So that's one way to qualify what they can buy. The other side of the coin is buying a rental property, and I get this question almost every day: how much can I afford to buy rental property? And I say, well, that depends on how much is the rental income. If you're buying a $400,000 property and you're only getting $1,500 rent, you may not be able to afford that because of the mortgage and the offsets and stuff. But if you're getting $3,000 rent from that very same property, now maybe you can afford it. Mm-hmm. So that's the biggest question is how much rent you got. I send my clients a template that says the property is, here's the price of the property, here's how much the down payment is, and here's how much rent you have to get to be able to afford that property. Mm-hmm. And they can just go shopping and say, okay, well, I want to buy a $500,000 property. My rent is this. Is that more or less than what I need to buy the property? And they can be pretty confident that they're going to qualify. So yeah, pre-approved is tough because the bank always looks at the property, right? Yeah. And if you don't have that up front, you don't know what's wrong with it. The appraisal may not come in or whatever. So it could be tough to make an unconditional offer on a rental, for instance.
Yeah. Okay, good. Another question we have here: if you want a mortgage with a HELOC, it just disappeared on me. Is the rate higher than without a HELOC? So does the rates change whether you have a HELOC or not?
Not with the banks I deal with.
Okay, good. Another one, can you speak to second mortgages on properties? Are lenders generally open to lending on properties that already have a mortgage on them? So I guess there's 2 ways we could look at that question. Is one, how do lenders feel about second mortgages? If I want to buy a property and I'm going to qualify for a first mortgage, but I don't have all the down payment funds. And let's say the vendor is going to supply some of that by means of a second mortgage, a vendor take back. Are banks allowing that kind of thing these days?
Well,
Not really.
every big bank mortgage typically says no secondary financing allowed.
Okay.
So to go into Scotia and say, hey, I want a mortgage for 80% and I got a 10% vendor take back, that doesn't work because number one, you're doing an insured mortgage. It just ain't going to work. I get calls like that from people say, hey, I'm going to buy this apartment building and I got a 20% vendor take back. I need 80% financing. And that's nice, but it's not going to fly. So
Okay.
Typically you can't do secondary financing on a property without approval of the bank. But people do it all the time. They get an Olympia mortgage to put on or something. Maybe they're doing renovations and stuff like that. So you really have to know what the bank rules are, and you got to be careful. Sometimes you don't use the same lawyer for the secondary financing as you did for the primary. So
Interesting.
I got to be careful what I tell people. So
okay, I like it. How does qualifying work on a short-term rental property? So let's say I'm buying a property and I plan to Airbnb it, or I plan to do, VRBO or rent it corporately or whatever. How do I provide proof of the rent I'm going to get on a short-term rental?
The banks don't like them.
Okay.
They don't like Airbnb. So if you were thinking of buying a rental property, you would tell your broker, I want to buy a rental property and, it's vacant, but we'll do market rents to show what the market rent is. And you don't tell your broker anything else. We just play dumb. And if you tell us you're going to do as Airbnb, then we have a obligation, to our lenders, because full disclosure, we can't withhold anything from them that might influence their decision on a mortgage, right? So sometimes people start talking, I just say, hey, don't quit talking.
Okay, so if you are planning to, and there's a lot of people that go out there and they buy Airbnbs. Okay, so if they're planning to do something like that, then regardless, the appraisal that comes in, the market rent appraisal or whatever it might be, is going to be based on a long-term rental. So you're not really going to be able to show the income that you would end up getting off of a short-term rental, assuming that it's not vacant.
You can't. Market rents are on a monthly lease basis. And, there are some lenders who will do Airbnb, like or is a really, really hot place for Airbnbs. They're selling these friggin' condos for $600,000 or something down there. So, and people want to finance them, and some banks might do one depending on how it's zoned and everything else, but when you start going for the second one and stuff, they're really nervous. Some of them like to do some lenders will do, if you do it in a corporation, it's kind of a business over time, they might look at that on the commercial side. So, but in the broker channel, I haven't had very much luck financing any Airbnbs, their Airbnbs.
Okay, good to know. Good to know. Okay, so regardless, you're basing your financing on a long-term rental rate, and that's what they're going to be approving you on. If you choose to then rent it as an Airbnb after the fact, or do whatever short-term rentals after the fact, you can do that. It's just that your qualification is going to be based on the rents that you would get long-term versus short-term. So you're not really getting that extra amount of rent that you would hopefully get renting it short-term.
If you decided to refinance it and you didn't have leases and stuff to show regular rent payments, you'd have a hard time refinancing it as well.
Okay. What percent? Okay, I think that kind of answers Brandon's second question here as well. So here's another question, and I'd love to get your guys' opinion. We're starting to run out of time. We only got 10 minutes left here or less. But a lot of people out there are still doing joint ventures, and is it still possible to do JV deals? Liz says, I'm hearing that banks do not like them. So what's the story if I wanted to joint venture with somebody, I'm the money partner, I'm qualifying, how does that work? there is somebody else that would have a beneficial interest in it. But how does all of this work with JVs? Is it possible to get a mortgage these days in a JV?
Well, you have to disclose, right? Whoever has a beneficial interest. There's a little tick box on most mortgage documents that, I get my advice from Barry McGuire, and he says there's a box there that he has to ask the question, does anybody else have a beneficial interest in this property? So if you have a JV in place and you plan to split the profits, then the answer is yes. So then the bank might come back and say, well, what's this all about? We thought it was a mortgage for, we thought Corey was getting this mortgage by himself, and now we find out there's somebody else involved in this property who's getting a share of the profit. So if people say, hey, I got somebody who I might JV with, I said, well, so what you're telling me is you got a friend who wants to buy a rental property, period.
Mm-hmm.
Quit talking, I'll find your friend a mortgage for a rental property. Their down payment, their mortgage. If they decide to sell you an interest in this property after it's sold, well, I guess that's your business. But
right. Okay.
There's a case where, you tell your mortgage broker lots, but sometimes you don't want to tell them lots.
So. Okay. All right. Anything to add to that, Shaune Sullivan?
Yeah, it's kind of, well, have to be careful, but kind of like Shaune said earlier, just make sure you use two different lawyers and you don't do it on the same day. It kind of helps a little bit.
Yeah, don't have your lawyer write up a JV adventure, a JV agreement and say, me and Jim are gonna JV, and then, in comes Jim to sign the mortgage documents a week or two later, and beneficial interest. He says no. A lawyer says, well, I know you have a JV agreement on this property, so. And lawyers represent the bank as well as you at closing time. So they have a fiduciary obligation to the lender as well to disclose anything like that goes on.
Yeah. So I guess the question comes down to if you already have a JV agreement in place, you are JVing with somebody, well, then they're going to have to qualify for the mortgage as well. If you don't have a JV in place and you don't have an agreement in place, then your potential JV partner can go and get a mortgage. They can buy a property. And if at some point down the road you choose to JV on that property with them, that's a decision that you can make down the road. That's kind of what I'm understanding. Am I correct in that?
You can do that, but you got to be careful what you're telling your mortgage broker, because if you tell us that's your intent, then we have
to disclose.
Yeah, we have to let the lender know that what's going on there. So
okay, makes sense.
It's not all bad. If you have a strong partner, it's not all bad to sometimes be on the title as well. So it's unless your credit is bad or something like that, or you've got a bunch of other properties that may affect the qualifying or something like that. So it's a slippery slope that we got to go down here, right? So we got our fiduciary obligations, so that's why I say it's kind of hard sometimes to know exactly what you want to hear from the client. So
okay, all right. So let me see here. One of them asked, "Do you work with Ontario investors?" So yes, the question. Both of these mortgage brokers work with Ontario investors. And actually, what I'm going to do now, because we're getting close to the end of our time here, is I'm going to put on your contact information scrolling on the bottom. So if anybody here wants to get a hold of Shaune Sullivan or Shaune Impey, so Shaune Sullivan is the one up on top, and Shaune Impey is the one on the bottom. If you want to get a hold of one of these guys, then their email is up there on the screen. Feel free to send them an email. Get in touch. Ask them what they will send you the list of stuff they're going to need from you. Do you have it often, guys, where somebody just has no clue where they're standing financially? They just kind of want to get an opinion. Is this something that is a possibility for me? Can you give somebody in a 5, 10, 15-minute conversation? Can you kind of get a feel as to whether or not somebody you're going to be able to get them a mortgage, or whether they should bother even pursuing getting financing? Or do you need all the documents and everything signed before you're going to be able to give somebody a verbal yay or nay? How does that work?
I don't know about Shaune Sullivan. I get those calls every day. So
Okay.
how much can I afford? Well, we can have a 10-minute conversation, and if you tell me your income, how long you work there, are you self-employed or salary? Do you know what your liabilities are? Do you know the mortgage and other costs for your properties? Whether you got one or two or whatever. I got a spreadsheet, and I just punch that numbers in, and it says, here's what you can qualify for. So
Okay.
doesn't take long. Now it's all subject to verification, of course, because if you tell me to make 100 and the job letter says 75 or stuff like that.
Yeah.
Shaune
Sullivan, same thing.
Yeah, I do the same thing, but then I say that we're in Ontario, and most of us probably can't qualify for a mortgage, unfortunately, outside of that.
Yeah.
The average price in Toronto right now is about $950 for townhouses too. So you have to be making close to $200,000. So if you come to me and say you're making 50 grand, then we have to talk about something different.
Yeah.
Assuming you don't have, much of a debt load, every $20,000 gets you $100K a mortgage. So if you make $100,000 minimal debts, you should be able to get around a $500,000 mortgage.
Okay.
That's thumb in the wind type of estimates.
Yeah.
That's
No,
what I
we're going to hold you to that, Shaune. We're going to hold you to that. Okay.
And the other thing is the amount of mortgage you get depends whether you go conventional with 20% down or you go insured, because insured guidelines, you're locked in at 39% of your income. If you go conventional, there's a number of lenders that will let you sneak that ratio up to as high as 46 to 48% if you're a good client. So that can make a difference. And one thing you put on the sheet you sent us there, Corey, is a Smith maneuver. You want to know who's a certified Smith maneuver, which I am.
Yes.
So I can talk to you about the Smith maneuver and how it works on your own property and how to set up a mortgage on your rentals that's going to benefit you by using the same strategy. So.
Yeah, awesome. So a lot of people listening, if you haven't heard of Smith maneuver, we will throw it in the chat as to what that is. We have a few trainings that we've done on the Smith maneuver with Robinson himself. But when you are using that maneuver, you want to use a certified professional, and that's Shaune Impey in that case. So awesome. Yes, thank you for bringing that up. So we've gone through most of our questions. We didn't have time to get through all of them, but just let us know. Start with Shaune Sullivan. Is there anything you've heard of in the works for investors that might be coming down the line to make it easier to qualify for, more difficult to qualify for? We always hear that chatter in the background that something might be coming. Anything you want to let investors know, Shaune Sullivan?
I don't think that there's anything that's concrete enough out there to want to stir that pot. But Trudeau might want to tax capital gains or increase capital gains. You might want to do the 35% down payment thing that's been talked about in the last little while. Any of it's possible. I can't see too many changes happening right now. I think that they're going to want to see us get out of COVID and go from there.
Yeah,
that's it.
Okay, and Shaune Impey, anything in the works that you've been hearing?
Yes, there's a major broker channel lender that's going to allow holdcos.
Allow holdcos. Okay. That's a topic we didn't even get into tonight. The difference between qualifying personally or qualifying in a holdco or through your corporation. I'm sure all of those things are slightly different. But is it good news for holdcos that they're allowing this? That's a good news for investors.
That's a good news for brokers, because there used to be 4 or 5 lenders that would do holdcos in the broker channel. And that's dwindled to 1, and it's tough to get properties through them. It's only 70% loan to value. So this is good news. Just found out about it and sent in my first file tomorrow.
Okay, cool. All right, well, that's good to know. So, hey guys, unfortunately, we're running out of time. I appreciate you guys and all the knowledge that you brought to the table today, answering these questions. giving investors out there a little bit of heads up as to what they can do to best prepare themselves. So thanks for coming on today and sharing your knowledge with us, guys. We appreciate it very much. And there's a ton of thanks in the chat. I don't know if you guys can see the chat, but there's a ton of people saying thank you. Great info, great information. Thanks for all the info. Thanks, Shaune and Shaune. So much appreciated. We appreciate you guys coming on.
Great. Thanks for having us.
I see lots of my clients in the chat, so that's good. And last comment, it's always free to talk real estate. So if you want to contact me and have a chat about anything, it doesn't cost you anything.
Absolutely. And I think that's a great word of advice. So anybody here that wants to have a quick conversation with either one of these Shaunes, give them, send them an email. It's on the screen now. Set up a quick time to have a call and have a conversation, see where things can go, what's available to you. So appreciate it, guys, and we will talk soon.
Great. Thank you.
Great.
There we go, guys. I hope you got a little bit of gems, something that you can maybe use or some information. When we know about these things and we're talking to potential partners or we're raising capital or we're doing whatever the case might be, it's good for us to have this information in the back of our minds. To know that things, what kind of interest rates we should be using on our performance, to know the types of documents we need to get prepared, to know what type of maybe a conditional period we want to put on our offers. All of these types of things are going to affect how professional we look when we go out and we start buying real estate. So some good information. Hopefully you can put it to good use. We will see you next week. We're talking about a really cool topic on RRSPs in real estate, how we can use our RRSPs, how we can best invest them in real estate. What are some of the rules we have to follow and the things that we have to watch out for? So that's next week. So same time, same place, Tuesday night next week. We will see you. All right. Thanks for joining us, guys. Take care, and we'll see you next week.